Hi guys, this is Lee with the Market Sense for the week of February 19th, 2019. The charts in this presentation are provided to us by the Trade Navigator software, which comes from Gettess. And in looking at a weekly bond market chart here, I'm torn sometimes with trying to blow this chart up big so you can see the detail up close here, but I really want to keep a bigger picture because it's kind of nice to know that this whole sideways pattern that we're looking at for the last several weeks here is all taking place above all of these highs back here from last year. I mean, it's important to know those things. So I like to maintain big perspective, and I hope you can still see the short-term stuff here close enough. What we've got here is 147, 47.08 right in there is kind of resistance this week, and support maybe 146.06. Now, obviously, those are really, really tight, really close together. And if they were to drop down to here to 145.03, I think, is this lower moving average, that's fine too. It's still within the confines of this sideways pattern. And that's kind of the problem with looking at support and resistance in here. The most important thing they could do probably is go down below 144 or above 148. And what they do in between there is not that important and probably won't lead to that much of a move. But they also may not be doing much. So that's why we're looking at the 147 and above area here for resistance, and potentially 146.06 as support. I'd really rather see them down 145 area, but no guarantee they're going to move that far. It's hard to know what will really stimulate bonds at this point since, we've kind of got all the Fed stuff out of the way. Stocks are definitely suffering from a Monday on Tuesday deal this week, with Monday being off, because this is a very, very quiet period. Not much going on for the week so far. In general, this move up is just astounding. They've only come near the middle moving average once, and they're just so relentless going up here. At the same time, we got like 4 bars down here and then twice as many going up, which is not that uncommon. Markets do go down faster than they go up quite often. But it's very difficult to analyze this and think you have any idea what to do, because they certainly look like they're due for some sort of back off. And by that I mean a substantial back off. Except they don't. I mean, they're just relentless. There's no back off at all. And yeah, it's kind of a frightening market. It's hard to know how to control the risk. What we're looking at this week is potential resistance up in the 2804 area, just above 2800 here, which again still would not be taking out these highs. The support, if they're going to continue to trend up, should be around 2744. But gosh, down to the middle moving average here, 2714 would be very welcome since we haven't seen it. And even a move down to 2665 here at the lower moving average wouldn't signal any particular problem. I mean, that would just be normal. I really wish they would back off hard. Wouldn't be able to do anything about it, but I wish they'd just back off hard for a week or two and then give us something to analyze, because it's really hard to analyze an escalator. Except I will say this, even though I think they're due for a turn down, I'm not anxious to sell this. I mean, there's just too much momentum to step in front of, even though there's not a lot of volatility, but the momentum is too strong. There's no reason to step in front of this. We'll let somebody else do the hard work and knock them down, and then we'll see if we got some price swings to analyze. So that's what we've got for you today. I hope you can find something profitable to get yourself